Hello, traders. Welcome to today's event. This is Jim Simmons with ARC AI. And in this session, we're going to be looking at how we disrupt the order flow game, how we can freeze time and freeze the tape so you can take control of the market. We're looking at the first real-time order flow algo. And more specifically, we're looking at how you can use it. A lot of different ways that we can go about doing that. Before we dive in, of course, we have our disclaimer. Please take a quick look through the disclaimer. We have no interest in the outcome of your trades. Can't guarantee results, products and services for educational purposes. There's risk involved with trading. All right, good. Sorry about that. I had to clear my throat there while we were at it. So let's dive right in here. So we're going to look at, let's start off with man versus machine. We've all seen it before. You go to take a trade and you miss the entry. Heck, I missed two really good trades today. Of course, I managed to take a couple stop outs. And of course, I happened to get those. That's how it goes, right? But, man versus machine, you can't see everything. You can't take every trade. You're never going to be 100%. Of course, you got emotional interference. I know none of us have ever been frustrated trading or felt like you have fear of missing out. You miss a trade, or maybe things are hard to execute, or you don't have a trade plan, or even if you do, you don't follow it. So it doesn't really matter if you have it. I know none of us have ever broken our rules before either. Maybe you do back testing and it looks like the greatest thing in the world, and you go to trade it live and you're like, what the heck is this? This is terrible. It's usually not the other way around, right? Maybe the market conditions change. We're in summer trading. That is a little bit different from, fall or spring trading. And you got to be on your game. When it comes down to trading manually, you have to be 100% laser focused, dialed in, 100% execution. Otherwise, your results suffer and ultimately your account suffers. So why would you want to automate? Well, there's increased speed. It's way more accurate, aside from the little bit of slippage here and there. Minimized human emotions. The robot don't care if you feel good or bad. It's doing what it's supposed to do. You can more easily back test and optimize. What your edge is because you've got the data to prove it. You've got improved order entry, less missed trades, systematic trading, and it's 100% mechanical. Now, that can be a good thing. It can also, there's certain things where we as traders could choose to intervene. And we'll talk about that here today as well. The reality is, when it comes to algos, many of us have purchased an algo and thought, gee, this seems like the greatest thing in the world. And then you go to trade it and you go, gee, this is not the greatest thing in the world. The reality is not all algos are created equal. There are certain functionalities or certain things that you want to be able to optimize. Maybe there's different settings you want to use. Maybe you want to employ some money management filters or blockers, or maybe you just want to let it run to your target for the day, call it a day, and come back tomorrow. You can, with our algos, they all have what I would consider to be really the best brain I've seen in an algo. We've got, optimizations for day trading, scalping, swing trading. It's applicable on all markets. They're all stress tested. They're built for use on custom range bars. Not only that, but many of these algos, they're not optimizing or backtesting based on even the bar. They're backtesting on the real data that's coming in, and especially the case is true with this algo. And there's a lot of customization you can do in terms of obviously stops and targets, but you can filter based on momentum, or all sorts of different moving averages, all of it, right? So the idea here is that these algos are designed to be the best of the best. And I think our team has really done a good job of accomplishing that. So what's the deal with this algo? What makes this different from any other algo that even we've released? And we have a number of them out there, and they're great, but this is different, and I'm going to tell you why. First off, it's not based on indicators. It's based on real-time order flow. Now, real-time order flow is what drives the market, right? We know that volume leads price. Well, order flow leads volume, because you can't have volume until you have orders. And that is exactly what this is decoding. It's the first software that we know of that freezes intrabar order flow. We're going to dive more into that, what it looks like, what that actually means. But that's a pretty powerful concept. We're not waiting for the bar to close like every other trader. Most traders are looking for a certain set of criteria. They wait for the bar close, they enter at the bar close. Well, in many cases, you could be late to the dance. You could be getting in at a less than ideal entry, or worse yet, you can get in at an entry that causes you to get stopped out. Meanwhile, everybody else has made money. It's the first algo that allows us to test performance based on intrabar order flow. So it doesn't matter if the bar is closed or not. When we're running the back test, it's back testing based on intrabar, which is pretty powerful. It allows us to trade an edge that really is not humanly possible. And the reality is, like, you could see the signal sometimes, and you can enter the trade sometimes, and you might get a less than ideal entry and so on. When we look at how fast the print is coming in, the reality is you just can't see it quick enough. And if you do, you're not going to see it 100% of the time. And with an algo, this allows us to be able to see everything that's happening, because it freezes it once it achieves a certain result, which is pretty powerful. And there's certain situations where you want that, and there's other situations you might want to use a bar close signal as well. And we'll go over that here as well. It allows us to manipulate the order flow, the volume, the imbalance requirements, and we can take everything combined with the impact of all of these factors and put it into one, and we can do it at lightning speed, and we don't have to actually execute. Do you guys have tones going off? I don't hear anything. Anybody else hear anything? Let me know if you're hearing something weird. I'm gonna mute my mic for a second. Check your settings, Thomas. Not sure. I don't think anybody else is getting those. So we have a lot of different signals, and in fact, this is a growing list. I didn't even didn't catch that. There's actually a few more signals we're going to look at as well. But we've got stacked imbalances, we've got trap trader, we've got delta divergence, we've got now absorption signals, and flush reversals, and all sorts of stuff we're going to look at. So freezing the tape intrabar, what does that mean? Well, the HFT algo, which is what we're looking at today, allows us to freeze the order flow as soon as the intrabar analysis is met. So we no longer have to wait for the bar to close. We freeze it in real time and execute instantly. And that's the edge. Okay, so we trade the order flow as it's coming in, not after it's happened, because the whole point of trading with order flow is to trade as it happened. If we wanted to trade after the fact, then we would trade with indicators. And I'm not saying there's anything wrong with trading with indicators. We use them all the time, but there's a time to, especially if you're scalping, you want to get into the market and you want to be done as quickly as possible. So we're going to look pretty heavily at that. So let's take a look at some of the signals. Okay. So we've got trap traders and delta divergence. How many of you are familiar with order flow? You're familiar with some of these concepts. You've heard it before. Yeah. So some of you have already traded some of these things, right? So order flow, let's take a look at a couple examples here. So on the left, you've got buyers. On the right, you've got sellers. Okay, so what we're looking at here is we're looking at when the buyers are going up to the ask, then this would be bid aggression, right? We've got buyers going to the ask price. So this is an example of let's say you go to buy a car, right? And the asking price is XYZ, and you say, nope, I don't dare pay you the Z. I'll only give you X and Y. And so the seller is saying, nope, I've got other people that are ready to buy from me at that price. So take it or leave it. And you as a buyer say, screw it. Just give me the thing. And you go pay the price. That's exactly what's happening here. Buyers are going to the ask and they're paying the price. Now, in the other case, you can have sellers that are saying our asking price is XYZ and nobody's buying. So they have to come down and sell to the buyer who's bidding XY. So what it is it's aggression in one way or the other. It's what causes the market to ultimately move is you look at supply and demand. If supply exceeds demand, then price goes down. Demand exceeds supply, price goes up. So in this case, what we have here is anytime we have a lower low in price with a bullish candle and positive net delta, meaning we have more buyers than sellers on that bar, that's delta divergence. Okay. Trap trader would be in the case where the sellers ran out. We ran out of sellers down here. Seller said, nope, too cheap. I'm holding my price up here. I'm going to sell here. So there's no more sellers. So the buyers have to go up in price if they want to buy, because there's no more sellers here. So that is trap trader. Think of this as exhaustion. Sellers ran out of gas. They're exhausted. Okay, we've exhausted all of the supply. So we got to go to a higher price. Okay, so those are those signals. Very powerful. Then we have stacked imbalances. So what does this mean? What we're looking at in this case is a relationship between the buyers and sellers at a specific price. Normally, this is done on a diagonal basis. It's normally how it's factored. Our software allows us to look at horizontal imbalances as an added difference. So if you want to look at it directly, you can. Our software allows you to do that. But with the stacked imbalance, think of it this way. There are way more buyers going to the ask than there are sellers coming down. So it could be a number of things. Could be buyers jumping in on market orders. Could be price coming up to hit stops. Could be a number of things. What you really need to know is that the buyers are aggressively going up in price to buy. That's what we need to know. And that's exactly what these signals are going to do. Now, I'll tell you, you can get these signals all over the chart. And that happens quite often, which is why it's called HFT ALGO, because you can take a lot of trades and you can dial it in. If you want to scalp with it and take tons of trades, you can do that. If you want to trade it as a semi-auto discretionary method and with auto execution, you can do that. So a lot of different ways you can use this tool to implement it into what fits you as a trader. Everybody's different as a trader, so you got to make it work for you, right? And I think ultimately there's something for everyone. There's a lot you can do with this here. So what this is whenever we have three levels is usually the number of consecutive imbalances that you want to trade is usually three. You can go with 4, you can go 5, you can go down to 2, but we recommend at least 3. Okay. So in this case, what you're looking for is at least 3 levels where the buyers far exceeded what was happening on the sell side. And in that case, that's going to give you the stacked imbalance signal. Okay. Yeah, it could be in lack of flow from the other side. So what this is saying is that there was anytime there's, I don't want to get too deep into this stuff because order flow training, we could be here for hours. There's quite a bit involved with order flow. But what this is saying is that buyers entered either at market or they went up in price as a stop order. That's really what it means. On the other side of that, it's limit orders. That's really what it is. Okay. So that's just the way to look at it, but we're not going to get too deep into it. That's what the AMA is for tomorrow. So we'll go over that. Well, what if you combine trap trader and delta divergence, which we have on this bar? Well, then you can get an even more powerful signal. You can combine a lot of these signals together, and you could say, I'm only going to trade this if I have delta divergence and trap traders and confluence and positive delta absorption. You can throw it all together, and you're going to have, like, you know, the Christmas fruitcake. just throw it all in there. What do you got in the fridge? I got some of these things. Okay, yeah, throw them in. So that is a couple of the signals. Now, next, this is brand new. Technically, I don't even know if it's gotten released officially. It's coming out today. They just finished up the build on it today. It's actually out. So, but this is brand new today. So this is, nobody's seen this before, except for those that were in the trade room with me this morning. Excuse me, one second. All right, so apparently I was not done coughing. Okay, long signal on the flush reversal. This is a very, very interesting signal to me. We saw the delta divergence. Delta divergence was when we have a lower low in price and we have positive net delta on a positive bar. That was delta divergence. What if we have a lower low in price with negative delta, but the bar still went up? To me, just from my years of trading order flow, and this is just my take on it, nothing right or wrong about it, but to me, this is more powerful, because what this is showing is that the delta was already negative. It was already coming down. They put in a lower low. They still had negative net delta, but they weren't able to actually close the bar lower. To me, that is a very powerful factor, because there was enough buyers that were able to rally the price. So this is something that I'd be very interested in, and I'll show them on the chart here in just a bit as well. Yeah. So really what's happening here is price is coming down. You got selling. They're getting aggressive, but they're running out of gas. Like, we've got stacked imbalances at the low on the sell side, but then enough buyers were able to absorb everything that was happening on the sell side, and they were able to push the market up. So very, very powerful, especially when you've got confluence setting in on the subsequent bars. Really, really powerful stuff. So that would be the long signal on the other side, higher high in price. We've got positive net delta coming into that, but then we get a bullish or a bearish close on the bar. So even though the buying the net delta was positive, then it's still closed lower. Everybody familiar with net delta? Net delta just means if you have 100 buyers and you have 200 sellers, well, that would be negative 100 net delta. Means you have more sellers than buyers on the bar. Okay, so the assumption is if net delta is negative, price should go down. Net delta is positive, price should go up. Now, it's not that simple. If it was, we'd all be millionaires and multimillionaires. There's more to it than that, unfortunately. But that's why we use other factors and signals and combine them together. Let's take a look at confluence. How many of you have heard about the confluence signal? And you've heard Sean say, it's coming, we're building it, it's coming, V2. V2 is here, and so is confluence. Good coffee. All right, so confluence, really what's happening here is anytime we go from not all green to all green, confluence. Not all green, confluence. Now, notice we didn't get a signal here while we were already in a trade. Okay. Not all green. Again, we were still in a trade. All green, not all green. I missed one. Yeah, that one. That one counts, but it didn't throw a signal. And I noticed this, and this is just a fun example for us to look at. You notice how that's all zero? Like the net delta was 0, which is pretty rare. I suppose it happens. But for that reason, it did not throw a signal there. Yeah, it could be a gap, right? Gap up. We've got prints, all on both sides. It's just, that's just how it ended up landing down. So that one didn't throw a signal. This one, not all green. This one is confluence. That one is already confluence. So we don't do it again. And here we can see our signal off of this bar. Not all green, not all green, all green. Confluence. That's it. That's what it does. Now, my suggestion would be trade it directionally. But wait, there's more. I'm going to give you something else that's going to make it even better for you, because that's what we do. Okay. Confluence signals. Very, very strong, strong info to trade. Yeah, absolutely. Then we have another new signal, the absorption signal. So what does that mean? So really what's happening here is, think of it as a delta flip. That's really what's happening here. We go from all green. Now, it's important to note the cumulative delta must be all green as well. Okay, so we're coming up, cumulative delta is up, your delta's up, everything's green, and then we get negative net delta. Now, we do not need to be all red coming out of it, but we do need to have negative net delta. So there could be a case where we have, the cumulative delta is still positive, but we were like here, it's still negative, but we got positive net delta coming out of all red. So this was our all red. We got one bar in between, so you can do a 3-bar pattern or a 2-bar pattern or whatever. And then we had positive net delta. Okay. I will tell you, this is like one of my favorites. One of my favorites. Really, whenever you see this on a 3-bar pattern, they're great. On a 2-bar patterns are great too. And we're going to look at a couple examples of how you can trade those. Okay. But we talked about freezing the tape. Freezing the tape really matters on these stacked imbalances. That's when it really matters, because what's happening here is you've got aggression in the print. Well, the bar is going up and it's going down, it's doing all this thing. Well, you might have stacked aggression on one side, but then it disappears because price comes back up and trades back up into it. So does that make that initial signal invalid? No. We want to know when it's happening versus waiting around for the bar to close, because everybody can see, oh, we got stacked imbalances on the bar close. Everybody can see that. So what's the edge? The edge is that we can see it before everybody else. Our tape freezes to show us that we have the stacked imbalance. We get into the trade and we get out, and everybody else is getting in up here. And we've already taken profit. So that is the power of the intra-bar signals and freezing the tape. Here's another example where we can see there's our data, but down here we don't have any data because we froze the tape on this bar, froze the we froze the orders. And so the signal is actually here. So rather than waiting for bar close, you're leaving money on the table. And we're already taking profit. The imbalance we can see here on the left, we can see the imbalance right here, right? Well, if we look over to the right, this is the same exact chart. This is what everybody else is trading. And you notice no stacked imbalances. So the bar closes, everybody's still waiting for a signal. Meanwhile, price left without them. It already hit targets and moved on without them. So really, really powerful when you're able to freeze the tape. After freezing the bar or data, does it continue to populate after re-engaging the bar? So once that bar has shown a signal, that bar freezes. And then the next bar is the one that would start showing data again. Yeah, as soon as you get a bar with a signal and intra-bar, it's going to freeze the tape. That's what it's designed to do. So we've got a little video for you. Those of you that were with us for the launch and you're doing an encore presentation, which is exactly what this is, because we had such a massive response to the launch. We've had traders in the trade room with us, and we'll talk about that as well, but just a huge response. And so some of you might have seen this on the launch, but it's worth showing again. So I'm going to go ahead and play this video here. If you can't hear it, let me know. You should be able to, but if you can't, let me know. But let's go ahead and check out this video real quick.
All right, traders, what we're going to do in this quick video, I'm going to use this to demonstrate the demo for the launch webinar. And the reason I wanted to film this is because I've set this up to demonstrate a specific concept that has been basically hard-coded in the algo. Now, most of the people that are new to order flow, you may or may not know that there's two stages before order flow gets transferred into your charts. The first one is your inventory, which is ultimately your DOM, which is levels above and below price, right? And that'll be basically what we consider inventory, orders that are coming into the market. And then once they move from the inventory into the time and sales, it's basically executed. But the problem with this equation is that nobody can see the impact of that order flow in real time. And a lot of order flow tool sets or software that's basically been put out, they transfer this data into the candles. And that's not a new concept. And we've pioneered it years ago with the print profiler. There's been many other products that have been released with regards to order flow. Heck, there's even order flow platforms out there. But what we've noticed is that nobody can understand the data as it's coming into the bar from level 2 and being able to track the impact of that inventory inside the time and sales. Because what happens is that you'll see numbers changing in these candles. They'll be constantly changing. And what ends up happening is order flow software that's out there will normally color information inside the candles, but everybody waits till after the bar closes before they make a decision. Now let me turn this on and show you why that's not effective. Now, as you watch, you will see that there's orders above and below price. These are orders at the ask, these are orders at the bid, these are sellers, these are buyers, but at any given time, these orders can be pulled or manipulated. It's level 2, right? Level 2 can be manipulated. It's called spoofing or all of that stuff, right? Now, once this order is executed on the inside bid and ask, it then moves into the time and sales. But the time and sales moves so fast, you literally have to be a robot to understand it. And unless you're a speed of tape trader, it's not going to make much sense to you. On top of that, being able to make sense of this information, like what does 172 mean versus 1141, and what does this 18 mean against 140? Like, most traders don't want to have to become a statistician to be able to understand the data coming into the market. So as you watch, this is done on purpose. You're going to see that this chart freezes the order flow data. Okay, I'm going to freeze the tape. As imbalances are coming into the market, and you're going to see that it's going to execute 2 trades. It's going to execute 5 contracts on both sides. The only difference is this chart over here freezes, and this leaves it as a constant. And you're going to see this order flow data tell a completely different story once I'm in the trade. And you'll see how most people aren't even able to capture that information as it's coming into the print. Now, we'll get into how to set it up. We'll get into how to ultimately create different volume thresholds, right? And how to create different multiplier effects, because, having an imbalance is one thing, but being able to throttle that information is much more powerful, right? And unlike most bid and ask,
order submitted,
and there's the execution. Now, you're going to see here that this candle froze the time and sales data. The market's moving up and down, but this chart over here, it tells a completely different story. We've let the order flow unfold here to make sure that you can see that you can't even see these imbalances in here after the candle absorbed down. You don't see it. It happened on the open of the candle, but after price moved up and down, you can't see where the impact of those buyers started because they're being absorbed inside all of the other order flow. And so what ends up happening is a lot of traders wait until the bar closes to see, oh, there was a whole big bunch of order flow. But here's what happens. They wait for this candle to close, okay? And then what ends up happening,
order canceled.
Let me pause this now. What ends up happening is that they wait now for this candle to close, and they'll wait to see, is there any order flow data here that shows me maybe I've got, a stacked imbalances here later. But you can't see that in real time. Now that's a huge threat, because by the time this candle trades up and then you wait for the market to come back down to an area of impact, the move's over. Like real-time order flow traders traded up this way, while all of the rest of the order flow traders are waiting to make sense of that order flow data, which means you're technically no different than every other indicator trader in the business. You're looking at order flow after it's happened rather than as it's happening in real time. Now, we're going to talk a little bit about the volume thresholds, because what we can do inside the strategies and inside the algo is we have the ability to control the imbalance percentages and the imbalance multipliers. And this is really unique because we can actually optimize the impact of that volume. This is what makes the HFT algo so powerful, is I can take, you might use the S&P and set a much different volume threshold than you would on the NASDAQ and on crude oil. How can you tell yourself what volume data to use? You have no idea. Everybody just automatically uses a default of 3, right? Oh, it needs to be, if this is a 10, well, this needs to be a 30 and it needs to be an imbalance. Well, I'm ultimately not just checking the order flow candles going like this. I'm also comparing the data going like this. And we have the ability to test horizontal imbalances versus vertical imbalances. And right now what you can see is I've set the volume threshold to that an imbalance comes in. It has to be minimum 10% of the bar's volume at that time. And I want to see an imbalance. This is set to horizontal. I want to see that the buyers are 10 times larger than the sellers. I want to see that the multiplier is 10x. So that when I do get an imbalance, 234 is 10 times larger plus 21, right? And unlike a lot of other imbalance softwares, you're going to compare them diagonally. What I found statistically after testing is that the imbalances set to historical horizontal levels produce better results. Now, you would not know that if you didn't have an algo or be able to freeze the tape to be able to make sense of that information. So as you can see here, there's a whole lot of other things we can go into, but I just wanted to film this video for the purpose of the demo. And now what we can do is we can transfer over into the live charts and take a look at some of the historical back tests. And then what we'll do is we'll open up our guest passes to the trading room so you can come in and we can basically show this to you live in real time once we go live with this across all of the companies. So all right, traders, let's transition back into the presentation.
Very cool. Good stuff, ain't it? It's incredibly interesting. So as we saw, this gives us an advantage. Order flow happens every day, every bar type, every time frame. There's several different directions you could go as a trader with this. You could trade high frequency, meaning 20 to 50 trades a day. You can do day trading. You can do swing trading intraday. It just depends on what you want it to do. You can set stops and targets based on that. You can use very high multiples for the bid-ask imbalance and only trade the strongest ones. Like Sean was talking about, a 10x multiplier is pretty big. So it's up to you. As you can tell, there's a lot of trades in here. We're looking at, probably at least 15 to 20 trades right here. That's a lot of trades. So there is plenty of trades available. The question is, how do you filter it to trade it the way that you want? And this is probably more of a normal look for most traders where you can, trade maybe 4 or 5 trades a day and do totally fine. So there's a lot of different ways to go about it. We're going to look at the charts and look at some examples, but here is some back testing that we've done. And we've got optimized settings that we can give you. We've got more coming on the new signals. I know Sean's doing some testing on that right now as well. Here's some examples of really quick trades, really small trades, just kind of scalping for, a couple ticks at a time, really quick trades. You could trade it that way. You can trade for bigger targets. Again, it's totally up to you how you want to trade it. And we can give you some ideas and you can take it and run with it. So yeah, you can trade on more than one instrument at a time. You just have one on each chart for example. So we have been using it so far. I am trading this in the room. I'm still trading it on sim, and the only reason is I want to make sure that I can execute properly, and that I'm not having any issues there. So yeah. Have you noticed a huge difference in monitoring diagonally, horizontally? We've seen that horizontally performs really well. Yeah, it's triggering orders great. It's, we've tested it on multiple accounts, and trade copiers, the whole thing. Yeah, absolutely. Different examples, different back tests. These are different settings. We've got, scalping with no money management. So if you just want to take really quick targets and you want to put a bigger stop on, that's what this is going to look like. I believe this setting is 2 ticks profit, 12 ticks stop. And you would think like, man, why would anybody want to do that, right? Well, there can't be any money in it. Well, even after commission, you're still at a 2-point profit factor. So the point is you can really trade it however you want. So let's go over that. And then we've got another setting here that is with money management. So you want to get to a set target every day, you can do that. And you can see profit factor goes up quite a bit, 3.78. Then we've got scaling out with no money management. Excuse me. So then you've got scaling out with no money management. This is going to be where you're taking multiple targets, bigger targets, that sort of thing. And then with money management. So you can set targets and stops and so on and so on. And then this is, of course, built for all traders. The reality is you can trade this in so many different ways. You don't have to just trade it as an algo. You can. You certainly can. It is designed to trade automatically for you. You can optimize your settings, deploy settings, and just watch it go. Or you can turn it on and off as you come into certain areas that you're interested in trading. That's the way I'm trading it, actually. You can use it in conjunction with discretionary methods. You can use it for directional trading. And there's so many different opportunities. It's pretty wild. So looking at confluence, as we started to look at those signals, anytime you've got all green, you've got some really good opportunities to, let's say you want to see it go all green. And once it does, you engage the longs, and then you only take the long trades in those scenarios. You can do that. It's a great way to trade it. You can trade it with the EMA. And we're going to look at that on the charts. There's a number of different data points that the system is going to demonstrate and display for you. Let's go over these here. Give me 1 second here, guys. Bear with me 1 second here, traders. Sorry about that, guys. All right, so back to it. So there's a number of different things that you're going to see here. You've got net delta, of course. You can see it above and below the bars if you'd like, or you can just look at it on the grid. You've got cumulative delta. This is going to be an addition of whatever number of bars that you want it to add. It will add the delta. Now, this is a massive, massive advantage, because on any other platform that I've seen, maybe somewhere out there it exists, I don't know, the cumulative delta is usually for the day. So it's from market open until now. In this case, you can have it say, I only want to add the last 3 bars of net delta. So in this case, it would be 503 plus 851 plus 10 as a negative number. Very, very powerful. And as you can see, it's adding more numbers than that, but you can set that to whatever you want it to be, which is huge. Bid ask percentage, total bid percent, bid volume or total ask volume, whichever is greater, divided by the bar volume. So this is going to be, the percent. If it's above 50, then it's positive. If it's below 50, it's negative. Then you've got percent delta. This again is a huge advantage of knowing your percent of net delta versus the overall volume. So what this is saying is that it's negative 10% versus the total volume. Anything over 5 to 10% is pretty strong net delta. What that's saying is that there's a much greater percent of selling than buying if it's a negative number. Okay, so again, it's a huge advantage. And then, of course, you can see the total volume of each bar. Okay. Moving right along, this is Sean trading confluence. Looking and waiting for the confluence signals in the right locations on the right side of the market. Very, very important. And you can see the trades. There's a couple great trades, and that is something that has been officially built into the software. We're going to look at it together. Trading with the HFT, you can see here again, looking at confluence opportunities. You can see where it flips from green to red and so on. A lot of really great opportunities. We're just going to go look at it on the charts because I think it'll make way more sense. We'll be able to look at it and have more interaction with it, right? Here's an example of, this is me trading stacked imbalances. And this is an example where I'm using this as a semi-automated signal. So what this is you can see there's signals everywhere. The question is, where do you trade them, when, and how, right? You can trade it just as it's programmed. You could trade it to just say, if we're above the EMA, go long. If we're below, go short. And you can certainly do that. Or you can filter it out and only take just a few trades and just take the ones that are the best for you. And we're going to look at some opportunities on how you can do that. But these are real trades. And then here's a trade from today. This is a trade that we took in the trade room. Nice little trade. We watched it come into the area of interest. We watched delta flip to red. We set it to go short. We had this bar that did not give us a signal, and but it was still in a valid location. So we left it on and caught the trade right there. Nice little trade. We took that trade in the room today. So let's go check out the charts. Let's go look at the charts. Does it show the signals of SI on the charts? Yes, it does. Yes, absolutely. Very, very good. Interesting. Okay, so let's go check out our charts. Let's go here. All right. So the first way that we're going to look at trading this, there's a number of different things I'm going to show you here. The first way to trade it is to say, I'm going to trade it as an algo, and I'm going to trade it with directional bias based on the exponential moving average. I'm sorry, I cannot write with a chart. Okay, so we're going to look at trading this on the right side of the EMA. Okay, we're just going to trade the stacked imbalances. So let's zoom in here and let's take a look at some of these signals. So this is right off the market open. We are above the EMA, right? So we're looking at longs. And the system is programmed to only take longs above the EMA. And we can see that here. There's our stacked imbalance. There's the entry. No waiting for the bar close. No waiting to see the print come in. Print's already there. We got our stacked imbalances 3 levels deep, and off she goes. There's the order. There's the target. Okay. So that's the first trade. Let's look at the next one. Now, because we're already in a trade, it's not going to fire another trade here. So we wait for the next bar. We're still above the EMA, and we've got stacked imbalances. Long. Fire the trade. There's your target. Okay. Moving right along. We've got a new bar here. We've got 3 levels deep. At this point, we're a little bit overextended, but the algo doesn't know that. The algo says, let's go. This is my signal. This is what I'm going to take. There's the trade. There's the target. Now, this one sat through a little bit of heat. Your stop is right here. Target's right there. Moving right along. We get out at the highs, and this algo is just firing off orders. We got another stacked imbalance, fires another order. In this case, we take a stop out. That's okay. Coming back down. There's our stop. Low ticked us. Oh, well. Then we've got the market coming back above the EMA, and there's our stacked imbalances. Again, we froze the print, got the order. There's your target, and you can see what's happening here. We've got another one right here coming up. Again, this one stops us out. That's okay. Wait for the next one. There's our orders, and you can see how this is going. There's a number of trades here. Not every trade is going to be positive when you're trading it as an automated system. You've got another order here because now we're on the other side of the EMA. There's your 3 levels of imbalance. Notice we didn't get a trade here. Why? Because we are already in a trade. So we can't trade that one. Wait for the next one. There it is. Took another short here. Stop out. Took another short here. Win, win, stop, win. So that is an example of using it as a, pure algo, just setting it to just run. You could certainly do that. Many traders do, and you can optimize it exactly how you want it to go. So there's an example of this day would have net, what was the starting point? 392. So you would have net, about, was that a few $100? Okay. Going back to the previous day, we can look at what did it do the day before. Yeah, kind of bounced around a little bit, ultimately ended up with about $400 in profit. Right off the open, win, loss, win, 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 win. At this point, you probably just want to shut it down. I mean, it's up to you. You could set money management goals to say, if you're up, what is this, up $300, $400, take it and run from it. Take it and run, Yeah, I think there's a lot of traders that are using it. It is still pretty new, but if you want to see what they're saying, you can go into the Discords and see what traders are doing with it. Of course, we're trading it in the trade room as well. We're trading it a little bit differently in the trade room, though. We're using it as a semi-auto. We're using it kind of discretionally. So let's take a look at that. What does that look like? Okay, let's go back. I'm just going to show you a handful of signals here. What we're doing here is we have 2 EMAs. Okay, how many contracts MES? That's up to you. However many you want. I mean, I think we're trading 10. We got 2 EMAs here, 25.50. Okay, 25.50. And so when the EMAs are up, we're trading longs. We're looking for the market to put in highs, come back to the EMAs, and reject out. That's what we're looking for. And that's how we trade it. What is going on? There we go. Okay. So right off the open. So what I've got here, I've got all of the signals turned on, every single one. The reason I'm doing that is because I want to show you the power of using this in the right locations after the EMAs have crossed. Here's the EMA cross. Okay. Now these are set to like really ultra small targets and stops so that we can see every single signal. So what we're looking for here, EMAs are down. Market's down, structure's down. Which way should we trade? Short. So we wait for the market to come up into the EMA. We wait for the delta to flip. We engage the algo. We take the trade. We take the money. News, 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 news. I've got a few of them plotted out. Let's go to the next day. That one would have just been the one trade. That was Monday, the holiday. Here we go. Here's today. Let's look at it from today. EMAs are down, right? Well, it's kind of sideways moving, right? The EMAs are squeezing, okay? But let's just say you wanted to engage the system. We haven't yet got negative net delta. We did on this bar, but I'm looking for it to come out of that. I don't want to get in down here because now we're trading back into support. So I actually skipped this. Aggressive traders could take that trade. It's up to you. No signals in here because, again, we're kind of far removed, but this is the one I want to show you. Okay. EMAs are down, lower lows. We come back up. We're trading back into the EMA. We're positive net delta. This should actually be here. Sorry. Positive net delta. There's our negative net delta flip. And then that would be the trade. Now, again, this would be the aggressive one because it's a couple bars removed, trading back into the lows. But the market has shown us that it is willing to break the lows. 1, 2, all of these lows are getting tested, but ultimately we're down. So there's a trade opportunity there. It's more aggressive. And then here's a trade coming back into the EMAs again. Positive net delta, pretty neutral net delta, but ultimately we had a bullish close into negative net delta on a bearish close right there. So we fire it to go short here. There's the trade. There's the target. Quick targets. So that is another way that you can trade it. And this is exactly how we're trading it in the trade room. And you can come in and trade it with us. We'll tell you when to fire it, where to set it off, and where to, all that. We tell you all that stuff. Let's look at our new signals. Let's take a look at what's happening on these new signals. So this is the flush reversal. Just to recap what's happening here, let's zoom in. Okay. Here, market's coming down. All red, right? All red. Cumulative net delta is still all red. Then we get the lower low in price. We've got a bullish close on negative net delta. There's our flush reversal. There's your trade. There's your target. Negative net delta and bullish close. There's your signal. There's your trade. There's your target. I like this a lot. I really do. Let's take a look at this one. Negative net delta, lower low, barely, but it is a lower low. Positive close. Now this is negative 6% net delta, meaning the total volume, the net delta is 6% of the total volume, and you still had a very bullish close on that bar. Obviously, they're trying to tell you something. The order flow is trying to tell you something there. You take the trade there. There's your target. Coming in again. See it again. Negative net delta. Positive close. There's the trade. Positive net delta. Negative close. You got stopped out. Oh, well, which way is your market going? EMAs are up. Market structure's up. We're putting in higher highs. Should you be trying to trade short? Probably not. So you probably shouldn't take this short either, even though it's a winner. Probably shouldn't be trading that one. So that is the flush reversal. Very, very cool. And you can, you can use these as a combination of factors too. And that's the beauty of it. Now, the flush reversal is an end of bar signal. Okay, this one you would not trade intra-bar. Like you need it to be end of bar, close of bar. Wait for the bar to close, and then you get your signal on these. So there's a couple of different ways to trade it, right? Let's take a look at the confluence signals. Which way is our market going? Long. Which way should we trade? Long. Confluence. So confluence signals happen anytime we go from not all green to all green. That's the signal. Now, you can turn it on when you're on the right side of market structure. Here, technically, we're not on the right side of market structure because our structure's down. But our EMAs are up. We're still putting in higher highs. This barely flushed below. You notice there's no buyers there. Anyway, that's a flush. And then came back through. There's your confluence signal right there. All green. Have to have cumulative net delta for this signal to fire off. You have to. There it is. Moving right along. All green, but this is the one that was the zero we were looking at in the other chart. I just used this as an example in the PowerPoint as well. And then here we go. So not all green, all green. There's your signal. There's your trade. Coming up, not all green, signal, trade. You want to leave yourself a little more breathing room on these trades, something like 12 to 16, somewhere in there. I can't tell you how many ticks to use. You'll have to decide, but this is a 10 range bar. And I think, higher stops on these with bigger targets too is better. Here it is again, not all green. First bar that's all green fires a signal. And if you have subsequent bars that are all green, you're not going to get back-to-back signals. You only get it after the first bar. So in this case, you see this is not all green. This one is. This is the one that fires a signal. So this bar, even though it's all green, would not fire a signal because the previous bar was all green. It's only the first one. Okay, so there's your next trade. Now notice we have a signal here, but we don't have a trade. This is another feature that got added into this build, was that even if you're not trading every signal, you're still going to see the signals, because you might want to be able to see what's happening in the order flow. You just might not want to trade it. This is set to long only. Why would we set it to long only? Well, market's going up and to the right. So we're looking for longs. We're not looking for shorts. There is a winning short in here. You could trade that if you want. I just have it set to longs only because directionally is always going to give you the best bet, especially with order flow. It's so much easier to trade with the flow when you're trading order flow. Kind of goes without saying. Here's your first confluence bar. There's your signal. There's your trade. Not trading the shorts. Notice what would have happened here. But we could trade the long. Now, this one's a little bit further off of the pivot, but still works. Just a little bit far extended on that one. So that is the confluence signal. Very, very cool. And this is another one of those that you can, this is end of bar, obviously. You can set it to just fire off in the location you're looking for. Let's say you want to wait for a major break of structure and you want to trade only when you're at the high of day, and you only want to trade it in those cases, and you can trade it however you want. There's so many different ways to trade it. So that's a really great example. Let's go check out another chart, because there's always more. Let's look at absorption. So what is this one doing? There's two scenarios that we saw in the examples as well. Really what's happening here, all red, not all red, positive net delta. That's the signal. Now you can go all red to positive net delta. That would be a 2-bar. And let's assume this was not there. That works too. But that is the signal. Now, do you want to just trade that on its own? Yeah, maybe. Maybe not. Depends on where you're at. Depends on how you want to trade it. Maybe you want to wait for absorption, in your direction, and you want to fire it to go short here. You could do that. That would be a directional trade. Maybe you want to wait for the crossover and trade it only here after the EMAs have crossed. You could do that. You could wait for it to come back into the EMAs, wait for absorption, and then fire it to go long. And here it is again. Should you be trading that? That's up to you. Is it in an area of interest to you? I don't know. We're kind of in no man's land. I don't know if we're coming out of resistance, but you could do it that way. There's another one. EMAs are still up. Looks pretty good. EMAs are now down. Got absorption coming down. And then, this is not the time of day to trade, but there's some examples of what absorption is doing. Let's go to the next day. Let's go to regular trading hours. Sorry, that's kind of flying past you. EMAs are up. Should we look at trading longs? Well, it depends on the location. Is this the location you want to trade? Maybe. This one looks a little better because it tucked a little lower, flushed out these below there. And this is, a little bit after the open. This is kind of right off the open. These are just examples. Coming in off the pullback. Notice something here. Look at all those stacked imbalances with zeros on the other side. Very, very quick buying in that case. Those are fantastic when you see those. We'll look at more of this stuff tomorrow in the AMA, but I just wanted to show you what these signals look like. If the EMAs are up, you should probably be trading long. It's not to say that the shorts won't work, because a lot of them do. but you're probably looking more for the longs, and this one would have got you, but then this one works. So no big deal. There's another one. This one works too. So does that one. And now we're getting into noon. That one works. This one don't. What time is it? 1 o'clock. So there's a lot of opportunity here on these trades. Absorption is one of these things. Anytime you're getting from all red to positive net delta, that's telling you something. Market's shifting, it's rotating, it's moving, it's doing something. So let it tell you the story of what it wants to do. Now I'm going to go back here because I want to show you something else. Okay, close your eyes for a second. Okay, there we go. I don't want to get it's like all going fast and make you dizzy, right? All right, so here's an example of, remember we talked about the confluence trade, confluence signal. We've got all red, not all red, positive net delta. Then what happens on the next bar? Confluence. Now we haven't broken structure yet, but we're coming out of absorption and then we get confluence. There's something to be said about trading confluence coming out of absorption. I'm just going to show you some examples, let you decide what you want to do. All red, positive net delta, confluence. There's the trade. Now these, you want to give yourself a little more room, a little more breathing room on these trades, but there is room. There's another trade for a win. Did we get confluence here? Nope, nope, nope. There we did. Look at how high we are. We're not off the pivot. Don't trade those. Coming off the pivot. Yeah, we flopped around for a while, but we eventually got absorption into confluence. There it is. Structure still up on this one too. NBBO data. I'm not sure if I'm familiar with that one. I'm sorry. Yeah, if you want to let me know on that. Let's keep going, keep going, keep going. Let's go to the next day because none of us are trading these times. You could. There's probably a lot of good opportunities. I'm just looking at more like the regular trading hours. Let's go to one more day. Okay. Market's up. EMAs are up. We've got red, into all green. What's all green? Confluence. Now this one, depending on what your risk reward was, you could have caught a quick target here, and or you could have left it run. National best bid and offer. This is based on uptick, downtick. Yeah, if that answers your question. Coming back down. Now this one's not even the best location, but we've got confluence in the absorption. Like you don't even have to wait for this bar because we already had confluence right here. That is pretty powerful. There's your trade. Let's keep going. Absorption, confluence on this bar. There we go. There it is. Quick target. Or you could have held on a little longer if you wanted to sit through that. No confluence here. All red. Starting to turn. We got our absorption. And then we got our confluence on the next bar. Bam. All red. Confluence on the very next bar. Very quick moving. Zeros. Stacked imbalances. They're telling you they're ready to run with this thing. Giddy up. Let's do this. There's another one. Not even the best location, but we've got confluence on the break of the highs coming out of absorption at the pivot. There's your trade. This one again, if you want to sit through that, you can, or you can just take a 0.8 or 0.75, something like that. We've got another one here, but our confluence doesn't step in until this bar. You really want to get it, the next bar out of the absorption. As far as what I've seen anyway, that's the way to do it. So I've loaded you up. The point I'm getting at, there are so many ways to trade this. So how do you decide what makes sense for you? So you've got a couple questions you can ask that'll help you determine what's going to make sense for you. Are you trading reversals? Are you trading trends? Are you trading breakouts? Start there. Are you trading at AOIs, levels, major support and resistance, volume profile levels? Where do you want to trade the thing? If you're trading trends, Are you trading only at AOIs? Are you trading breakouts on major levels? Decide where you want to trade, and then you can decide how you want to trade it. There's a couple different options as far as, there's a number of different options as far as the signals. The stacked imbalances, the bid-ask stacked imbalances, those are going to be, they happen a lot. So you probably want to trade it in the right locations and let that be your confirmation that the market is respecting your level. It's a great way to trade it. Absorption works great on pullbacks, also works great on reversals. I mean, really, if you're trading this at area of interest and then you get confluence. Now, this one's a little quirky because it didn't happen until after all that. But, once you get confluence, maybe that's your trade. So there's so many different directions you could go with it, and all of them are great. So it's just a matter of use it the way that you see fit. We're going to spend more time tomorrow going through different examples on how you can trade this thing, whether you want to trade it as an algo, whether you want to have intervention or not, number of different routes you can go with how you want to trade it. So the opportunities are endless. I know for a lot of traders, you want something simple, something that's easy to understand, that you can just run it and let it do its thing. And there is a place for that. There is certainly a way to do that. We can help you come up with the idea of what that looks like for you, because odds are you're not going to trade every signal. You're not going to trade the flush reversals and the stacked imbalances and the deltas and the trap traders. You're not going to trade everything, and you don't have to. Pick one, pick two, pick a number that you combine together, and you can really go to town with it. So let's go back here. What we've decided to do is reopen the launch pricing so that you can get this at launch pricing. If you haven't already bought it, what are you waiting for? No, I'm just kidding. But we're going to go ahead and open up launch pricing for you again. Okay, so there's the link. It is on sale. Let me go double check because I haven't seen it yet today. Let's go double check, make sure they got it on the sale pricing. They should. Usually they're pretty on top of this stuff. But yeah, there it is. Good. $9.97. What do you get? You get everything I just showed you, all the signals. You get it on 2 different machines of your choosing. You're going to get all the documentation, user manuals, all that stuff. We've got the original AMA that we've done. We're doing another AMA tomorrow at 1 p.m. Where's my thing? Here we go. Tomorrow, 1 p.m. We're going to look at more examples. We're going to have some templates for you. We'll have more examples on how you can trade these. We're going to dive into different opportunities. Yeah, it's going to be good. So we'll do a deeper dive tomorrow. But that kind of gives you an idea on what the signals are, what they do, how you can use them, and all that good stuff. So tomorrow, come back around at 1 p.m. Let me get you a link. Let me get a link for that. Oh, I don't have the link. Hang on. I'll track it down. It's not there either. Okay, hold on. Actually, while I'm doing that, let's kill a couple birds with some rocks. Let's run a poll. How many of you want to see this thing in action in the trade room, or just want to trade with us in the trade room? If you buy the ALGO, you will get a free pass to come in and join us in the trade room. And if you really love what we're doing in the trade room, we will give you an amazing opportunity to come in and join us in the trade room at a huge discount because you already own the ALGO. Okay, so more opportunities, right? It's not just enough to just have a tool. You got to know how to use the tools. You got to understand it. You got to know how it works for you. So take time to do that while I track down the AMA link. Here it is. Let's see, is this it? Copy the link. Try lifetime upgrades. Yes, it does include lifetime upgrades. Let me make sure this is the right link. I don't want to send you guys to the wrong place. webinars. AMA, HFT, you know me. Copy link. Go to link. Voila. Here is said link to join the AMA tomorrow. Plans to use this ALGO ongoing in the great question, Stephen. Stephen's asking is, are there plans to use this ALGO ongoing in the futures trade room? The answer is 100% yes. We are currently using it in the trade room and we will continue to do so. We're going to trade it as a semi-automated system. So we will decide when to turn it on, where to turn it on, and all that. So yeah. Yep. And do you have accuracy of each type? Each type of what? Give a chance to watch in a live market prior to making a decision. Yes, absolutely. We understand that completely, Gene, and we want to give you that opportunity that you can see it in the market and see how it works. Yeah, absolutely. Accuracy of each type of signal. Yeah, they all work. Yeah, we've tested every one of them. They're very accurate. Yes, absolutely. Yep. Good deal. Cool. What else? What other questions do you have? Thanks for doing the poll, guys. That helps us understand. Can you tell us accuracy or is it a secret? Yeah, no, the signals are accurate. It's not a secret. I don't know that there's like any percentage, like it works. I don't know what else to say. It works and it works well. All the signals are firing off correctly. They've all been programmed correctly, all that good stuff. So yeah. Oh, as far as like hit rates, I mean, it just depends on stops, targets, percentages. There's so many factors you could put into it. I think that's what you mean. Yeah. Yeah, I mean, it really depends on how you're using it. I don't have a ton of data on like, here's what we've actually gotten out of it. At this point, it's been a lot of back testing and a lot of semi-automated trading, which is going to give you varying results, obviously. So I don't really know. Yeah, we don't really have a number on it. Yeah, no worries. Not a Ninja. Does Ninja have a preferred order execution? Yeah, there's a number of different data sources you can get on Ninja. If you're not on Ninja, probably the easiest way to get on Ninja is to either get set up with an account with NinjaTrader Brokerage, or and it's really inexpensive, and you can get data for like, I think it's like $12 a month, or you can trade it on a prop firm. You can sign up for a prop firm. Apex runs sales, get a pretty good discount on that. And then you can trade it. You can trade it in sim, even though you're signed up for an eval. That's fine. Just talking about a time. Yeah, absolutely, Stephen. Yeah, I think I got your email. I'll email you back. How many wins, losses today on your trades? So ES, we traded the ALGO. We got one trade for the win. There was some opportunities, I say that loosely, that were just not in the right location for me. So I skipped out on those. Yeah. And then crude got me. I was negative a little bit on crude, but positive on ES. So yep, absolutely. No worries. And I did not trade the algo on crude. I'll just be clear, I'm trading discretionally on crude oil, just so you know. So I trade ES with the algo, trade crude discretionally, because not every trader wants to use the algo, and that's fine. We should still have an opportunity for them to trade as well. But we will absolutely use the algo. It's been trading very well for us. So excellent. What else? What other questions do you have? Let's give you the link again. There it is, right there. So here's what we're going to do. If you decide that you want to use the algo, you want to run with it, you want to trade with it, if you purchase the algo, we're going to get you a guest pass to join us in the trade room, see it in action. Yeah, we'll get you in there and check it out. How resource intensive is it? It's really not that I've noticed. I haven't noticed. You can use it for equities, but you do have to, you have to set it up for the volume on that equity. So you either want to trade very high volume stuff, or or you might want to trade it on like EFTs, SPY, the Qs, that sort of thing. So that could be a good opportunity. Estimated daily profit percent. Nope. It really depends. Sky's the limit. It just depends on how much you want to risk, and every signal is so different. And depending on stops and targets, you could have, could have really small targets and get a higher win rate, or you could use, bigger stops, bigger targets. So it really varies quite a bit. It's not this is not a one size fits all type of equity or a type of algo. It's not like a black box where you just kind of set it and run and you have no say in how you run it. It's not designed to be that. And none of our algos are for that matter, but you can optimize it to be whatever you really want it to be, because order flow is order flow. It's going to happen on every market. The market literally doesn't move without it. So we'll go over some more info on how you might want to optimize it and so on. Give you some insight on that tomorrow. And then we'll have some more settings for you guys tomorrow too, as far as I understand. Can you use it multiple times with different settings all at the same time? Yes. However, there's a couple ways to do that. One is you trade it on different accounts. So you would have one account on this chart would be trading, say, stacked imbalances, and it would be intra-bar. And then you can have this chart over here trading end of bar signals on a different account. You could trade it on different instruments on the same account. That's obviously perfectly fine. If you're trading the same instrument, like let's say you're trading ES and you want to trade it on two different charts on the same account, you have to be able to turn one on and one off. Otherwise, you're going to get the thing trying to fire off at the same time. So, yeah. So probably the easiest way is use different accounts. And then you could just do your thing, or turn one on and the other off. But I'm going to say that's easier said than done. Just being honest, being able to turn it on and off on different charts and have multiple things moving at the same time, it makes your head spin. And then you try to run a trade room and trade discretionally at the same time and answering questions. Yeah. Gets wild. What else? Nothing else? We got everything? Got everybody's questions answered? Cool. Well, I think we're good to go. I think we covered everything. Let me give you the the link one more time if I still have it here. Copy link. Okay. There's the link to join the AMA tomorrow. If you got more questions, bring them in. We'll take a look at some trades. We'll take a look at some charts. We'll look at some settings. We'll answer questions. Just a good way for us to dive deeper into all of the functionality, capabilities, the opportunities, and how you trade with it, and look to simplify things, right? I know in these events, it's kind of like deer in headlights a little bit. Like, holy smokes, that's a lot of signals. How do I trade this? That's what tomorrow is for. So come out tomorrow. We'll show you some simpler ways that you can really take it and run with it to where you can go, okay, eeny, meeny, miny, mo. Okay, that's what I'm going to do. Obviously a little more defined of a decision-making process, but we'll get you more info so you know exactly how to trade it. Okay. So I know looking at it now, you can be like, holy smokes, it's a lot. We got you covered. We will not leave you hanging. Here's my take on it, guys. I'm a straight shooter. I'm pretty black and white. Like, I don't puff things up. I don't hype. That's not me. I'm very, what you see is what you get. And I pride myself on that. And I will tell you, I think that this is an absolute game changer. I really do. There's so many different directions you could go with it, but I think at the end of the day, they're all really great from what I've seen. We can help you nail it down. I think it's an absolute game changer. Even if you just have it for the order flow data alone, It's an incredible tool. So that's my honest take on it. Okay. Excuse me. So cool. We'll get back together tomorrow. I'll see you at 1 o'clock Eastern time. And if you have any questions before then, send me a message. And we will see you there tomorrow. Have a great rest of the afternoon, everyone. Take care. Catch you tomorrow and have a great evening. Take care. Adios.